I want you to get up right now and go to the window, open it, and stick your head out and yell, "I'm as mad as hell, and I'm not going to take this anymore!"
Hey everybody, welcome back to Milkshakes Markets Madness. Now look, if you don't know what a dollar milkshake is, well, we're not going to get into it here on this episode, or perhaps we will here in a minute. But what we want to point you to is the playlist. Start here at the top of the YouTube channel. It'll take you down that rabbit hole. But what the dollar milkshake theory is trying to explain is how the monetary system works, the dollar's role in that, and the idea that eventually both the dollar and gold will rise together before there's this huge climactic battle between both dollar and gold. A lot of people think they understand the theory, but various comments and controversy on both the YouTube channel and Twitter proves that people are only taking a glance at what the story is actually saying. So we encourage you to go down that rabbit hole. The other thing I want to mention too, before we jump into the week ahead, is we are very, very sensitive to everybody's time. We know joining us for a 20-minute video, even a 10-minute video, is a commitment. Now, a lot of people on YouTube will just hammer out content, no rhyme or reason. We instead create segments such as this one right here. We just finished up a full-length episode, which we usually post on the weekend. So you know what you're getting into with each video. It's just not a guess as to what type of conversation we're going to be having. Most of the time it's market related. Sometimes we get a little silly with our Madness edition that comes later in the week. So here we are doing the peak of the week. It's just as it sounds. We're going to dive into some of the stuff that's going on this week. But Brent, over the weekend, we did pretty much a deep dive into the Federal Reserve, the monetary policy they've been enacting over the past year, and the likelihood of a recent rate hike, or excuse me, the likelihood of whether or not they're going to hike this week at the FOMC meeting. Anything you want to add on that now that we've all had some time to digest that conversation?
Well, you know, I just think we're at this meeting where the market is not expecting a hike. Even though, you know, the last time they punted on a hike, but they said we're going to remain data dependent and we still see 1 or 2 rate hikes in our future, the market is saying, no, they're not going to do it. That despite the data, at least my interpretation of the data over the last 2 months has been that it has met or exceeded, you know, expectations. And so I actually think they are going to hike. Now, it's like 98% expecting no hike and maybe 2% expecting a hike. So listen, it is unlikely, but I just think that they're going to. And can I be wrong? I can absolutely be wrong. I think it's actually very close. I think it really comes down to what Powell wants to do as opposed to what he has to do. I don't think it really makes a big difference either way. If he doesn't hike or if he does, I don't think it makes a huge difference in reality, although from a psychological standpoint, I think it may signal something to the market that Powell wants to signal. And we'll see. We've only got to wait about 3 more days before we find out.
One of the things I appreciated in our conversation this past weekend, which we talked a lot about the Fed being data dependent, some of the things that could really push them either way to pause or to hike. But lately you've been talking a lot about sometimes, you know, you got to play the man, sometimes you play the hand. And one of the points that, you know, you were emphasizing this weekend was that this is potentially a game of credibility for Powell.
Yeah, and I think he's gone a long way towards helping that. I mean, Jesus, the guy has hiked from 0 rates to 5.5% rates in 18 months. And yet every time I make a comment about Powell, people are like, oh, he doesn't have any cojones, you know, he's scared, he's a slave to the market. I'm like, Jesus, have you guys been paying attention? A lot of the criticism, you know, towards Powell is that he's raised too much. And that's why the market is kind of interpreting that he doesn't have to raise anymore. And there's a lot of people who think that the hiking that he's already done is going to come, you know, back to bite him, because once the lag effect of all these interest rates hit, we're not only going to have a slowdown, but we're going to have this massive recessionary crash. And listen, I'm not sure which one of those it ends up being, but I just, when people say he has no credibility and that he has been weak and that he's uber dovish, I'm just like, are you kidding me? I mean, look what this guy has done. Now, there's no question that he's been much more dovish this year compared to last year. But my God, last year was the most hawkish Fed president we've had in 30 or 40 years. So it would have been hard to exceed last year's hawkishness. But like I said, there's a lot that goes into this. I actually think, from a personal legacy standpoint, Powell is more concerned with his legacy than some people think he needs to be. And I just think that I think if they don't hike this week, then I think the markets may surprise him with their bullishness, and he may end up regretting not hiking. We'll see.
Yeah, the animal spirit, something that we always like to remind people about, play a big role, not only just in the markets, but what the Fed is trying to navigate with monetary policy. Again, it's data dependent, but how do you really measure attitude or euphoria or fear? There's a bit of subjectivity there that, again, the argument that the Fed can control a complex economy by moving one little lever is certainly even something we push back on. But look, on this show, we do have some fun and enjoy adding a little bit of color to things like our thumbnails and the video descriptions. We think it does start some conversation. It does bring in eyeballs that might otherwise not notice us. But a lot of times people will very quickly realize, and one of the bits of feedback we get frequently is how grounded this conversation is. And it's interesting when you talk about Powell, and we go back 12, 18 months, nobody would have predicted where we are today. And, it's Sunday, the NFL football season's back, and it gets you just thinking about, the great theater that is sports. Well, economics and finance is a great theater as well. And to your point, people getting all riled up about Powell, they can't even accept what he has already achieved, let alone even being of the mindset to be able to predict that he would get here.
Yeah, and my thing with Powell is I feel like most of the people that criticize Powell are of the opinion that central bankers should not even exist in the first place. And so I feel like a lot of their anger at their existence is taken out on their policy decision-making skills. Now, there's no doubt that the Fed, kind of stayed easy too long, and then we had this inflationary result. And so the Fed has had to, hike since then. But if you are not of the opinion that central bankers shouldn't exist, and you're just measuring him based on what he is supposed to do in his role, I think he's done a pretty good job. I mean, the guy has taken interest rates from 0% to 5.5%, and we haven't had this massive crash or recession that almost everybody who thought that if he hiked would happen. And so I feel like he has gone a long way towards reestablishing some credibility that he lost with his transitory inflationary comments. And that's part of the reason why I don't think he wants to give that up. And that's part of, it's going back to your comment of are you playing the hand or are you playing the man? With this case, I'm kind of trying to get in Powell's psyche here and try to figure out what he wants to do. What I think is really interesting, is I think I've told you this before. I have a friend. He lives in New York. He's he worked for J.P. Morgan for a long time. He ran his own very large fund for a while. Then he stopped and managed his own money for a while. Now he's back, at another big hedge fund again. I think he's the best money manager I know, and I talk to him every week. And we were having a conversation on Friday, and we both kind of came to the same conclusion of where the markets were at, where interest rates were at. But the fun thing was, and we both thought if he'd hiked or didn't hike, it wouldn't really make that much of a difference overall. But I landed on the hiking and he landed on them not hiking. He was like, well, if it doesn't really matter, why take the risk of hiking? And I came to the conclusion, well, if it doesn't really matter, why not hike? And then nobody can question your credibility. And we both had to kind of laugh at it because, we come to the same analysis on where everything's at, but we came to different conclusions on what he was going to do. So, like I said, I'm obviously taking more of a flyer here. I'm definitely in the minority on this one. Powell typically does not like to surprise markets. So, again, the most likely case is that they do not hike this week, but I think that they're going to do it.
Look, when we were just first getting this show off the ground, I remember we did we put some focus on the jawboning aspect of whether it's Yellen or central bank presidents or the chairman himself, Jerome Powell, how funny it is that, we live in a world where all this emphasis is placed on, a semicolon in the Fed minutes and what they say. That goes way back in the very beginning. I think it was like Big Money Influencers or something along those lines as the show title. Now here we are, I mean, almost a year into it, and you're having a sophisticated conversation, two sophisticated, experienced individuals. You're not really looking at markets. Again, you're talking about whether Jerome Powell has a tell in his poker game.
Yeah, well, and it's funny too, because he was saying that he's actually not that focused on the Fed this week, because he doesn't think they're going to hike, and he's kind of feels like it's somewhat of a non-event. And it's just, I feel like it may not be that big of a thing for the markets, but I think it's kind of a big thing for him personally. And perhaps I'm reading too much into this. That's part of the problem with markets, is you can go down this rabbit hole and you never get out, because you think about this and you think about that, and perhaps in many ways we should just ignore this, a lot of this noise. But I do think it has the implications for the fourth quarter. And here's the other thing: if Powell doesn't hike, and let's say he doesn't hike, but let's say he comes across as dovish, what kind of a signal does that send? If he didn't hike at the last meeting, he said we're data dependent. The data seemed to be pretty good since then, and then he doesn't hike and he's dovish. Doesn't that say that he sees something that we don't see? And doesn't he have more access to data than we do? Again, I'm not sure if he goes dovish here that it necessarily shoots the markets higher. It might. I'm not saying that it won't, but I'm just not convinced that it will. A lot of times, if you look back historically, the Fed will tighten, then they'll pause, and then when they start easing again, that's kind of when markets sell off. So I'm not necessarily saying if he pauses, the markets are going to sell off. But I think there's a lot of people out there who think that at some point he's going to do a complete pivot. He's going to do a 180. He's going to go back to full-fledged QE, and the markets are going to take off. Well, I'm not sure that's the case. It might be, but again, typically in the past, when central banks start easing, it's not necessarily great for equities right away. And part of the reason it's not great for equities right away is the reason that they are easing instead of tightening is because the economy is not doing very well. Again, I think a lot of times people get cause and effect messed up. I don't think the Fed is causing the market to do anything. I think the market is causing the Fed to do certain things, right? I think the Fed is a reactionary agency. I don't think that they are the catalyst. I think they react to the market, and I think that's why they are always behind the curve. And so I just think, I think that for many reasons that Powell will not want to take the risk of no further hikes. And if he doesn't, to me, that tells you that maybe the market's slowing down a lot more than people realize, and that in itself might not be great either.
Well, violently sideways has been a theme all year long. It feels like we're much closer to whatever the pause or pivot decision is going to be. It seems like we're much closer to that happening. And so perhaps on the other side of that, we finally break out of this violently sideways trend. Now, the other thing that we're not going to keep this conversation going on too much longer, but I do want to bring to the attention the fact that this is also a busy week for housing. And, one of the biggest asset classes, one of the biggest forms of collateral for credit and monetary expansion is real estate. And it's just been one of those interesting conversations because, well, no one thought that the housing market would survive, let alone central banks, with the Fed funds at 5.5% and mortgage rates at 7%. But, supply is a funny thing. And, again, speaking of supply, over this past weekend, we talked about the SPR, the Strategic Petroleum Reserve, the influence that supply has there. So we're seeing that in housing when you have this low supply, despite the cost of credit, prices aren't really moving anywhere. So at some point, does a Fed pivot? Does that suddenly kind of open up inventory in the marketplace and we see a correction in housing? Who knows? That's one of the reasons why we keep showing up, but it will be interesting to see what the housing data is. We have some reports coming out Monday and then a bunch of things on Tuesday prior to the Wednesday FOMC. So if we have some, I guess you could say, bearish housing data, I think it'll only add some interesting factors to the eventual Fed decision. So let's keep all of that in mind. If you have some spare time from now until the FOMC rate hike decision, we encourage you to not only take a look back at the video we posted this weekend on Sunday, which talks about the SPR and oil, as well as this Fed rate hike decision that we just covered here. But another week past that, we did a video on China called The Great Fall of China. We didn't get an opportunity to get into it here, but some of the things that we discussed there seem to be completely missed or ignored by a lot of people, in Twitter at least, continually posting charts about net asset value and bond prices, etc., and completely missing the point. So we want to continue highlighting some of these missed, I guess, bits of context when it comes to data, because not only has Brent come up with the dollar milkshake theory to bring some clarity to some of these ideas, it doesn't help if you keep taking your view of the world and trying to apply it to the data instead of taking the data and applying it to what's really going on in the real world. So we'll get into hopefully a little bit more of that later this week, depending on how the markets unfold and perhaps what the FOMC decides. Brent, before we wrap up, any last comments you want to add to this Monday's peek at the week?
No, the only thing I would say is that, I think everybody is hyper-focused on the Fed this week, and perhaps maybe more, as my friend indicated, perhaps maybe more than necessary. The one thing that I've highlighted over and over and over again is that I think too many people focus on the Fed at the expense of not paying attention to what's going on in other countries. I think it is important to figure out what's going on with the Fed, but I think it's equally important to figure out what's going on with the ECB, what's going on with the BOJ, what's going on with the Bank of England. And the Bank of England has a meeting this week. Last week, the ECB had their meeting. They basically raised and then said, we're not likely to raise anymore. I think the Bank of England this week is probably to do something similar, and they might not even raise this week. So, don't just focus on the U.S. Make sure you're paying attention to what's going on in the rest of the world, because whatever catalyst for a potential crisis or a big market event happens, I think it's just as likely to come from outside the United States as it is to come from inside the United States.
I appreciate you adding that extra thought there. We did talk about the ECB and Argentina at the end of this past weekend's episode, and the BOE has a rate hike decision, monetary decision, same day as the Fed. So it looks like fireworks on Wednesday. Hopefully we'll have some more information for you after that event, and we'll see how the markets take it. For now, that'll do it for the Monday peak of the week. This is the Milkshakes Markets Madness show. You can follow us on YouTube at Milkshakes Pod. My friend here, Brent Johnson, the man behind the dollar milkshake theory, can be followed and engaged with on Twitter at Santiago AU Fund. My name is John Kutsmita. That is my handle on Twitter as well, John Kutsmita. That'll do it for now. I guess we'll just wish everyone luck, and we'll catch up with everybody in a few days. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.